Last year, you made a huge financial mistake. You didn't invest in Bitcoin. If you'd put money in Bitcoin on January the 1st, 2017, you'd have made 18 times your investment by the end of the year. Of course, nobody had any clue Bitcoin would soar so high, myself included. Only a handful of people got so lucky, like Christopher Kay, whose original $27 Bitcoin investment shot up to be worth $700,000. Well, I have news for you. There's a new version of Bitcoin on the way, and you have a chance to get in on this opportunity right now, while very few people know about it. I call it Bitcoin 2.0 because it will expand the current version of Bitcoin far beyond its current use, be used by millions more people, and take Bitcoin mainstream around the world. Most people haven't yet heard of Bitcoin 2.0. But as I'll explain, I predict a recent event in the financial industry could make the next version of Bitcoin a household name, beginning March 10, 2018. Along the way, it could make you 55 times your money over the long run, according to some experts. If you get in today, you could realistically make more money over the next year than you've ever made before on any single investment. I don't make this prediction lightly. Consider Eric Finman, for example, a 15-year-old who used a $1,000 gift from his grandmother to buy Bitcoin when it was first released. Today, he's worth $1.7 million. A lot of people think it's too late to make that kind of money on Bitcoin. And if you're talking about the original Bitcoin, you're right. Bitcoin 1.0 has returned 29,919,900%. up 1,700% in 2017 alone. Everyone from Bill Gates to Steve Wozniak has bought in. The result? The best performing investment of the past decade, outperforming stocks, bonds, gold, real estate, ETFs, you name it. Pretty impressive, considering the average American still has no idea what Bitcoin 1.0 is or how it works. In fact, many experts now predict Bitcoin will continue to soar. Silicon Valley billionaire and first ever Snapchat investor Jeremy Liu told Business Insider that Bitcoin could realistically reach $500,000. Even one of PayPal's board of directors has publicly predicted Bitcoin will hit $1 million and added, the biggest mistake is not to own any. But the reality is, Bitcoin 1.0 has serious limitations. For example, can you buy a book on Amazon right now using Bitcoin? Can you buy a coffee from a street cart using Bitcoin? Or even just click a button in your brokerage account and buy Bitcoin? Nope. And that creates the opportunity I'm sharing today, a new and improved version of the current Bitcoin. In short, Bitcoin 2.0 will be fueled by a much different source that could place it in millions of everyday transactions and send up to $12 trillion into this new asset beginning March 10th, 2018. That's the equivalent of everybody in America investing $36. Investors could make a fortune. But unless you've spent $1 million over the past year tracking down the details of Bitcoin 2.0, as we have, and hired a former Goldman Sachs business analyst, as we have, I doubt you'll hear the full story until it's too late. Demand for the next phase of Bitcoin could be so high that by the time most people get in, the biggest gains will be made, and you'll be stuck reading about the next 15-year-old who used the secret I'm sharing with you today. There's no telling how high Bitcoin 2.0 will go, but the fact is, our firm has been finding new technologies like this for more than 20 years. Like in 1999 when we predicted the rise of fiber optics, the rise of the smartphone in 2008, or when we predicted the success of new fracking technology in 2007 and called for an oil shale boom. All of these events came to pass. Barron's, for one, called us prescient. Just recently, a CNBC guest called our research firm brilliant, and you could have doubled your money 10 different times with our work along the way. Today, we've devoted months to uncovering what we believe will be the biggest event in the history of Bitcoin in 2018. It's the ultimate way to potentially make a fortune on Bitcoin, even if you've never touched it before, or even if you already own some. Here's the full story. My name is Brett Aiken. 18 years ago, from a kitchen table in Baltimore, our research firm released its first major prediction, the rise of the Internet, an idea that showed our readers a gain of over 6 times their money. Today our firm, Stansberry Research, has 360,000 readers in 190 countries. Our research has been featured in USA Today, on Bloomberg, MarketWatch, Fox Business News, Forbes, and more. Along the way, we've made several major predictions, like our call for Dow 50,000 back in 2013, the collapse of Fannie Mae and Freddie Mac in 2008, the bankruptcy of General Motors in 2007, and more. But today, we believe one of the biggest investment opportunities in America is the new and improved version of Bitcoin, what we call Bitcoin 2.0. You see, there's no question Bitcoin is one of the most exciting technological creations of our time, a form of money which for the first time ever neither the government nor any central bank can manipulate. The story is simple. It was developed during the 2008 financial crisis by a programmer who was fed up with the government printing billions to bail out Wall Street banks and destroying the dollar. His creation was a digital currency whose growth was strictly limited and which nobody can manipulate because it's scattered among computers around the world using unique technology. As Economist magazine wrote, anyone clever or lucky enough to have bought $1,000 of Bitcoin in July 2010, when the price stood at just 0.5 cents, would now have a stash worth $46 million. But for all its success, Bitcoin 1.0 has major flaws. For example, more than 99.9% of all merchants do not accept Bitcoin as a form of payment right now. Mom-and-pop investors are unable to invest in Bitcoin through an ordinary brokerage account right now. You have to get approved through a third-party exchange, which can take days. Bitcoin is still extremely volatile, rising and falling as much as 50% in a single year, hardly stable enough for a currency. If you keep your Bitcoin on a central exchange, you could easily get hacked and lose all your Bitcoin. These are all serious problems, which you almost never see the mainstream press talk about. Experts are so busy debating Bitcoin $500,000, they've totally lost sight of the fact that Bitcoin still has a lot of rough edges. Think about it. Why would you ever keep your money in a currency that regularly falls by half in a single year and which you can hardly use anywhere? And keep in mind, for all the excitement surrounding Bitcoin today, the entire market is still only 1/3 the size of Apple. Bottom line, Bitcoin 1.0 needs a serious upgrade, and that's where Bitcoin 2.0 comes in. It's a little known upcoming new phase of this currency you can buy right now online, and which could make you 55 times your money, as all these problems are fixed in a major way. Frankly, it could be the most lucrative new phase of Bitcoin since it first began trading in 2010 for less than a penny. Most technological breakthroughs start out a little ugly. Take Windows 1.0 for example. It was released by Microsoft in 1985, the original version of what would one day become the world's most popular operating system. But at the time, Windows couldn't do much. It could only run one application at a time, had no memory storage, and required a mouse for everything. But then came version 2.0, 3.0, and eventually Windows 10. With improved memory, multitasking, and a user-friendly format, Windows became a household name, making Microsoft investors rich. Well, right now, Bitcoin is about as clunky as Windows 1.0, but the fact is, by investing in Bitcoin 2.0 today, before it goes mainstream, you have the same type of opportunity as Microsoft investors in the 1980s, when Windows was still in its infancy, and before the stock shot up 83,000%. You see, innovation spread through society in a very predictable way. It's called the Rogers Curve, named after the PhD who described it, and shows that every breakthrough like Bitcoin passes through 5 stages. First comes the innovators, who develop the thing itself. Then come the early adopters, who love trying new things. Then it spreads to the early majority, who are willing to be adventurous. Then comes the late majority who are talked into it by everyone else. And finally, it gets accepted by the laggards, the kind of people who hate trying new things. We're right here with cryptocurrencies. But here's the thing. What most people don't realize is breakthroughs never spread through society unless they're tweaked and improved every step of the way to embrace a larger audience, as we saw with Windows, the iPhone, you name it. And right now, beginning on March 10th, 2018, Bitcoin is about to receive a major improvement from the financial industry, which will open a single investment you can secretly buy right now online, and which could launch Bitcoin into its next major phase of acceptance worldwide. Imagine using Bitcoin to pay for dinner, buying and selling Bitcoin in your portfolio as easily as taking cash out of an ATM. And imagine holding your Bitcoin in a secure wallet that no computer hacker anywhere can access. Well, that's the reality of Bitcoin 2.0, and why buying into this new version right now is like traveling back in time and investing in the original Bitcoin 10 years ago, when it was still trading for pennies. Let me explain. In short, beginning on or around March 10, 2018, my research shows that Bitcoin will receive a $12 trillion upgrade from one massive source, Wall Street. Most people don't know this, but until recently, many hedge funds were restricted from touching Bitcoin. As Forbes wrote, the fiduciary obligations Wall Street's hedge funds have to their outside investors often preclude them from trading Bitcoin and other cryptocurrencies. This was especially true in the earliest days of Bitcoin. As a result, only a handful of Wall Street traders have gotten a piece of the action. Mike Komaransky is a good example. After reading about Bitcoin on the blog of an economist at George Mason University, he begged his Wall Street boss to let him create a Bitcoin trading desk. It was a smart move. Mike recently retired to a French chateau at age 38. As he told Forbes, the only place to start an institutional-sized Bitcoin trading desk in 2014 would have been with me. But in 2018, that's all about to change. Beginning just weeks from now, the first massive flow of cash from Wall Street's biggest banks will enter the Bitcoin market for the first time ever. As Bloomberg reports, a recent event in the Bitcoin market could open the floodgates for institutional investors and make Bitcoin trading a lot more palatable for hedge funds and mutual funds. CNBC writes, this new event on Wall Street will allow more institutional investors to buy into the digital currency trend. Already, 120 new funds have sprouted up to take advantage of it. What makes it all possible is Bitcoin 2.0. You see, one of the biggest reasons Wall Street banks haven't yet touched Bitcoin is that there's been no way to protect their investment. The reality is, no money manager would ever invest millions of dollars of institutional money into an asset as unpredictable as Bitcoin. What Wall Street has been wanting for years is a way to protect their investment in Bitcoin, and that's exactly what Bitcoin 2.0 offers. On December 10, 2017, the Chicago Board Options Exchange launched Bitcoin futures for the first time, followed 1 week later on December 18th with the first ever launch of Bitcoin futures by the Chicago Mercantile Exchange. This means that for the first time ever, big banks can speculate on Bitcoin safely and get the diversity they need by hedging their Bitcoin positions in the futures market. These exchanges handle over $10 billion in transactions every day, which could funnel literally trillions of dollars into the next version of Bitcoin this year. As Business Insider reports, the launch of Bitcoin futures by establishment firms is likely to open the door to wider participation in Bitcoin trading by other Wall Street firms. The CME announcement provides the first step in legitimizing the ever-growing crypto space as a true financial asset, said a major cryptocurrency CEO. Even the Nasdaq plans to list a futures contract based on Bitcoin in 2018, said Reuters. All this means just one thing. More and more Wall Street money will finally be allowed into the Bitcoin market, which could send Bitcoin 2.0 up by literally hundreds of percent beginning this March. For example, the Wall Street Journal reports that Goldman Sachs could soon become the first big Wall Street bank to begin trading Bitcoin. And the Chicago Mercantile Exchange's CEO said recently, "I don't think I've ever seen so much attention around something like Bitcoin in my 37 years in this industry. The price action has been amazing." As institutional money pours into the Bitcoin market in 2018, it will have a trickle-down effect that could take Bitcoin 2.0 mainstream around the world. For example, with mass acceptance by Wall Street, major trading platforms could soon follow and open a direct link between Bitcoin and everyday investors for the first time. In fact, Fidelity, which manages $6.2 trillion, recently partnered up with Coinbase, the top cryptocurrency exchange, to do exactly that. Fortune even reports that Fidelity has been mining Bitcoin on its own. This is a huge windfall for Bitcoin, because if Fidelity creates a one-click button to buy Bitcoin through a brokerage account, millions of mom-and-pop investors could pour money into the crypto market overnight, and Bitcoin 2.0 could absolutely skyrocket. One multimillionaire crypto insider who recommended Bitcoin 1.0 just before it shot up 1,300%, predicts you could more than double your money in 2018 alone on the new version of Bitcoin. That's because a lot more people would probably own Bitcoin right now if a one-click buy option existed in IRAs and 401ks, which Bitcoin 1.0 doesn't offer. But with Bitcoin 2.0, it's a completely different story. In fact, even TD Ameritrade is taking steps to help launch the next version of Bitcoin. That's why it's crucial you get into Bitcoin 2.0 before acceptance by Wall Street sets all this into motion. And the reality is, it's already begun. At Barclays Bank, for example, the technology behind Bitcoin 2.0 is now being used to settle deals that used to take 20 days to process in just 3 hours. And every major bank in the world is currently experimenting with the technology behind Bitcoin 2.0, including Bank of America, JP Morgan, RBS, Credit Suisse, HSBC, and more. According to our analysis, it typically takes institutional investors 3 to 6 months to begin pouring money into a new asset once it's open for trading. In this case, the CBOE's launch of Bitcoin futures on December the 10th, 2017 means we should see the first massive wave of money begin to enter this new asset on or around the 10th of March 2018, just weeks from now. But here's the kicker. Acceptance by Wall Street will create yet another trickle-down effect which might have the biggest impact of all. In short, Bitcoin 2.0 could disrupt one of the world's most elite assets, gold. As Dan Moorhead, formerly the global head of foreign exchange options at Deutsche Bank, recently noted, gold has been doing great for 5,000 years. It's going to be around my whole lifetime, but I think it's going to slowly lose market share to Bitcoin. It's not hard to see why. Bitcoin 2.0 doesn't cost anything to hold, unlike gold, which is expensive to store and insure in large quantities. Because it's encrypted, Bitcoin 2.0 can't be confiscated by governments, unlike gold, which was confiscated by the US government in 1933. Bitcoin 2.0 can travel the world with the click of a button, unlike gold, which costs a fortune to move in large quantities. One foreign country recently spent $9 million moving 160 tons of gold. In fact, according to the Wall Street Journal, gold sales have plummeted recently as more and more gold investors turn to Bitcoin instead. For example, despite an increase in gold bullion prices, American Eagle coin sales by the US Mint in October 2017 are down 87% for gold and down 73% for silver year over year. Meanwhile, Bitcoin returned 17-fold in 2017 alone. And consider this. The total value of gold that has ever been mined is around $8 trillion. If Bitcoin 2.0 takes control of even 10% of that value, it would rise 10 times higher from where it is currently trading. And remember, that's just gold. According to the Central Intelligence Agency, there's about $80 trillion worth of broad money globally. Broad money includes coins, bills, time deposits in money market, savings, and checking accounts. With Wall Street acceptance, Bitcoin 2.0 could take a huge bite out of broad money. If Bitcoin 2.0 took just a 15% share of broad money, it would receive $12 trillion and send the price of Bitcoin 2.0 up 3,900%, turning every $5,000 investment right now into $195,000. That's an extreme case scenario, of course, but it's possible in the years ahead. Now you can see why in-the-know investors have been waiting 7 years for the launch of Bitcoin 2.0, which is finally a reality. And that's where it gets even better. The problem with the current version of Bitcoin is that you can only buy things with it in very select places. It's been accepted as an alternate form of cash payment by sandwich shops and wine stores, an online travel agency, even a cosmetic surgery office in Florida, to name just a few. But it's still not available at the biggest retailers. The release of Bitcoin 2.0 could finally solve this problem. That's because with mass acceptance by Wall Street and the growth of Bitcoin into a $1 trillion market, Bitcoin will finally be liquid enough to be accepted by all of America's biggest online retailers, including Amazon. Incredibly, it's rumored that beginning in 2018, Amazon could begin accepting Bitcoin 2.0. If this happens, it will open the floodgate for cash transactions into and out of this new asset by millions of dollars a day. Amazon is a retail giant. It processes over 16,000 orders every hour for around $300 million in sales every 24 hours. If Bitcoin takes even a small fraction of that volume, it could send Bitcoin 2.0 up more than 1,000%. Not to mention all the other retailers who could quickly follow, like Walmart, Staples, Apple, Target, Home Depot, Costco, CVS, McDonald's, Best Buy. The list goes on. Imagine waiting at McDonald's and overhearing someone in front of you asking, "Hey, do you have any Bitcoin?" That's the possibility of Bitcoin 2.0, where Bitcoin could be spent in batches as small as $1 anywhere the US dollar is accepted. And here's the best part. Unlike the US dollar, there are only a limited number of Bitcoin. You see, every 10 minutes, about 12 new Bitcoin are created, adding to the more than 16 million already created. But ultimately, Bitcoin is programmed to never exceed a supply of 21 million Bitcoins. As soon as 21 million Bitcoin exist, production will stop. Unlike the US dollar, which can be printed endlessly, this means Bitcoin 2.0 will never be watered down and destroyed like the US dollar, which has fallen more than 80% in value since the 1970s. And that creates a unique situation. You see, Credit Suisse estimates the number of millionaires in the world at 15 million. This means that not every millionaire will be able to own an entire Bitcoin 2.0 coin. Over time, this will only increase the rarity and value, like gold. As one crypto insider recently told CNBC, there's 15 million millionaires around the world. All their financial advisors are going to say, "Hey, buy a Bitcoin. You need some exposure." And right now, Bitcoin 2.0 is trading for relative pennies compared to how high it could go in that scenario. So how much money could you make exactly? Well, so far, we've seen hundreds of new cryptocurrencies issued since Bitcoin 1.0 was first created, like Ethereum, up 3,855% in just 5 months. Steam dollars, up 1,717% in just over a year. Or Monero, up an extraordinary 160,700% since it was trading for 25 cents in 2015. That turns every $500 into $793,500. But the reality is, none of these cryptocurrencies can accomplish even a fraction of what Bitcoin 2.0 will be able to do. Take BitTokens, for example. It's a new cryptocurrency that was released in August 2016 and touted as an improved Bitcoin, a more convenient alternative. BitTokens hasn't proven nearly as good as the original Bitcoin, yet it recently shot up 31,530%, over 300 times your money. Or consider another improved version of Bitcoin, like Litecoin. This new cryptocurrency too hasn't proven nearly as versatile as the original Bitcoin, yet it recently shot up 2001%, 20 times your money. Bottom line, with the mass release of Bitcoin 2.0, the amount of money you could make on an early investment in this new currency is staggering. Frankly, it's like buying Apple before Macintosh 1.0 came out and the stock went up 37,233%. Or like buying Amazon before the Kindle 1.0 came out. Or buying Netflix before the original version of its online movie streaming program was released and the stock went up 6,049%. That's why security software billionaire John McAfee, for one, has already invested $10 million into Bitcoin 2.0, along with some of the world's most successful investors such as Peter Thiel, early Facebook investor, former Goldman Sachs partner Mike Novogratz, billionaire Tim Draper, the early Skype investor Sir Richard Branson, and more. Bottom line, buy Bitcoin 2.0 now, if you can find it. This is one of the few times in life when you could realistically make a fortune on a single smart investment, and you can begin with just a few dollars online. The cryptocurrency market is like the internet in the late 1990s. We have no doubt the technology behind Bitcoin could soon become one of the greatest investment opportunities of our lifetimes. But along the way, there will be winners and losers, just as we saw with the dot-com boom. Some cryptos will become household names and survive for years to come, while others will disappear without a trace. So we urge you to be sensible and begin with a small speculation. Our report will tell you everything you need to know to get started, and why even some of the biggest names in government finance have gotten involved with Bitcoin 2.0, including former Treasury Secretary Larry Summers, Arthur Levitt, the longest-serving chairman of the Securities Exchange Commission, and James Newcomb, former chairman of the Commodities Futures Trading Commission. Even Edmund Moy, the former director of the U.S. Mint, has personally invested 5% of his savings into this asset. He recently told the Wall Street Journal virtually all investors who have retirement accounts should take a look at Bitcoin in an IRA. My goal is to make sure you don't get left behind when the next generation of Bitcoin millionaires are created, like Jared Kay, now rumored to be worth $30 million after his investment in Bitcoin 1.0, or a guy named Roger V, who became a millionaire at age 32 from his investment in Bitcoin 1.0. Bitcoin is simply the latest of dozens of investment opportunities we've come across in the market since 1999. In short, there's a tiny company involved in creating the world's largest Bitcoin exchange, using a technology that could move central banks around the world onto Bitcoin 2.0. No other company is doing this right now. Normally, it'd be impossible to invest in a startup like this on your own. Bottom line, Bitcoin 2.0 will be huge. According to a McKinsey report, Bitcoin technology will remove $110 billion in costs for the global financial services industry over the next 3 years. The financial regulation of entire countries is being redesigned to accommodate Bitcoin, including that of the third most popular global currency, the Japanese yen. And the international expansion is just beginning. Major financial exchange websites are now quoting the real-time price of Bitcoin alongside oil, gold, and the US dollar. In fact, we've even heard that central banks could begin buying Bitcoin 2.0. As Fortune magazine recently wrote, the most intriguing theory about the Bitcoin boom involves national governments. Specifically, are central banks acquiring Bitcoin to hold as reserves alongside gold and foreign currencies? At the Bank of England, for one, Mark Carney has cited cryptocurrencies as a part of a revolution in finance. Bitcoin 2.0 is perfectly positioned to capitalize on this boom. What it comes down to is this: if you ignore this trend, you'll possibly regret it for years to come. Bitcoin 2.0 could become a globally accepted currency and create an entire group of Bitcoin 2.0 millionaires. For example, I heard about a Texas businessman who made a $1,200 investment in Bitcoin 1.0 and used his profits to buy a Porsche. The next phase of Bitcoin could create your only chance to experience something similar, turning even a small $100 stake into a fortune along the way. Remember, even a small $100 investment in Bitcoin 2.0 right now could grow to a small fortune if Bitcoin takes off by as much as many billionaires are predicting. So whatever you do, make sure you put at least a tiny amount into Bitcoin 2.0 before the cash from Wall Street flows in and Bitcoin 2.0 goes mainstream. To get started, click the link below the video player.